In this video, I will go over the ICT concepts I regret not using sooner. Quite frankly, if I do think that I would have reached more profits by now, and my journey towards consistent profitability would have also been easier and shorter. Hence why I would highly recommend you to stick till the end of this video to get the most value out of it, because I really do think that if you implement these concepts that I'm about to go over, you will be able to reach your trading goals easier. So, let's get right into it. Now, I will hop on the charts and briefly go over the ICT concepts I regret not using sooner. And after that, I will show you exactly how I applied them on 2 trades that I took yesterday, trades that I also sent in my SMC trading group. The first concept I regret not using sooner is liquidity. When I found out about liquidity concepts, everything changed for the better. I was able to identify where liquidity was sitting. I was able to identify sell side and buy side liquidity. And most importantly, I was able to identify when liquidity was swept, because that is a very important pillar in my strategy. And I will show you exactly on this trade example how I use the liquidity concept. So it was right around here when I opened the chart on GBP USD on the M15 time frame yesterday at around 12:30 p.m. UK time. And right here, I saw a liquidity sweep. You might be asking where? It was right here. Okay, I consider this move to the upside, this whole move, to be a liquidity grab, to be a fake out. I mentioned this in the previous videos as well. How do we know we have a valid liquidity sweep? Well, we know that only if afterwards price breaks structure in the opposite direction impulsively. And this is exactly what happened, because right after the fake out to the upside, right after this liquidity grab, price then broke structure to the downside. So that's how I knew that this right here was a valid liquidity sweep. So now moving forward to the second concept I wish I used sooner is fair value gap or imbalance. How do we identify imbalance or fair value gap? Well, I'm gonna give you a very simple definition. If you guys want to have a more in-depth explanation on either one of these concepts, I have specific videos for each and every single one of them on my channel, so you should feel free to check them out after this video. So the easiest way to identify imbalance or fair value gap is to ask yourself this. In a bearish scenario, if price is moving to the downside, ask yourself if the low of the candle is overlapping with the top of the third consecutive candle. And in this scenario right here, the answer to that is no. So we have a bearish fair value gap right here. We have imbalance. And if the price is moving to the upside, it is right the opposite. Ask yourself this: is the top of the candle overlapping with the low of the third consecutive candle? If the answer to that is no, then we have a bullish fair value gap, and of course we have imbalance. Okay, so this is how easy it is to identify imbalance. Okay, and you might ask yourself, how does this help you in your strategy? Well, let me tell you. For me, I consider a break of structure aggressive only if imbalance was left behind. So let's look here. We said that price broke structure to the downside after this liquidity sweep. If the break of structure is aggressive, we need to have imbalance behind. And the answer is yes, we do have imbalance that was left behind right here. We left imbalance behind right here. We can see that imbalance was mitigated, but not fully. So it means that we still have imbalance. So this is why it is very important to know how to read imbalance, how to identify imbalance, because like this, you'll be able to determine if the break of structure is or isn't a valid one. Because for me, if there was no imbalance here, then there would be no setup. Okay, so now the third and final concept I regret not using sooner is supply and demand. After liquidity was swept and price broke structure to the downside, final step for me is to identify a unmitigated supply or demand level. In this case, I needed to identify a unmitigated supply level. Okay, so I needed to look for the point of origin. I asked myself, okay, where did the bearish momentum kicked in the market and took the price lower aggressively? And the answer to that is right here. Since we have imbalance right here, it means that this is a unmitigated supply level. After having all of these three in place, I then and placed the sell limit right on this supply level, which was right here. That was the entry of the sell limit. The stop loss was right above it, which was right here. And the last take profit was at 1-to-3 risk to reward ratio. I didn't set this trade in my SMC trading group. I will also attach a picture on the screen right now to show you exactly when this trade was sent in the group. And feel free to join the SMC trading group. It is the first link down below in the video description. From Monday till Friday, you will receive pending orders only. So if that interests you, you should go ahead and check it out. So after the trade was placed, all we needed to do now is wait. Okay, we placed our entry, the stop loss, the parameters, and now let's play the price and see how it played out. Okay, triggered right here. Nice reaction to it. Boom, TP1, TP2 smashed, and then eventually TP3 as well. Okay, so this was the first trade example using the 3 concept. I was able to take another trade on GBP/USD, but this time it was a buy limit. Right here, I was able to identify a buy limit and once again send it in the SMC group. This one was a very textbook in my opinion, and you might be already able to spot it. So once again, the first concept is liquidity. So the first thing that I was looking for was a liquidity sweep, and I saw this one right here. This is a fake out to the downside where price swept liquidity. Step number 2, how do we know it is a valid liquidity sweep? Well, after liquidity was swept, we need to see a break of structure to the opposite direction. And in this case, we have a break of structure right here. Now, the next step, we ask ourselves, is this break of structure a valid one? By valid, I mean aggressive. Well, how do we know if it's an aggressive break of structure? We look to see if imbalance was left behind. And in this case, yes, imbalance was left behind. Very clear to see that. Okay, we have this fair value gap. Now, the final step would be to identify a unmitigated demand level in this case, which was this one right here. This was the unmitigated demand level. Okay, so once again, you can see how I applied all of these concepts that I just went over. Okay, and I do this day after day. So now the last step was for me to place the buy limit on this demand level. So the entry was around here, I think. Yeah. Stop loss was right. Stop loss was right below the demand level. Okay, and the last take profit at 1-to-3 risk to reward ratio. And once again, I sent this trade in my SMC trading group. I will attach a picture on the screen right now to show you exactly when this trade was sent. And let's see how it plays out. But before we do, make sure you are subscribed if you enjoy this type of content, and feel free to drop a feedback down below. That will be very much appreciated. Let me know if you like these type of videos. So let's play the price and see how this trade played out. Okay, it triggered right here. We faced a bit of drawdown, which is part of the game, and then we moved straight to the upside. TP1 was smashed right there. Soon after, TP2 as well, and eventually TP3 as well. Okay, so this is exactly how we were able to catch back-to-back sniper entries on GBP/USD using these 3 ICT concepts. Okay, and of course I will attach a picture on the screen right now to show you exactly when I updated this trade, that it smashed all the targets, as well as the sell limit one, because I forgot to do that. And of course, a member of my group was also able to secure some nice profits on his personal account. I think it was on the sell limit, if I'm not mistaken. Okay, so yeah, on that note, I hope you guys found this video valuable. If you did, feel free to let me know down below. Also share and like it, that will be very much appreciated. And if you have any future video ideas, feel free to drop them down below. That will be very appreciated as well. And till next time, a very cool ICT strategy video will pop on the screen right now. I would highly recommend you to go ahead and check it out. And that being said, I want to wish you all the best and take care.